just to review what we have learned in this chapter. Okay. All right, so we already knew traditional costing, and now we've learned activity-based costing, right? And these are two different ways of figuring out overhead costs, right? They don't change your material costs, they don't change your labor costs, they're just two different ways of applying overhead. So with traditional costing, if you have a lot of labor involved in producing your product, it makes sense to base your overhead estimates on your labor costs or labor hours, or maybe machine hours. But if your company uses a lot of technology and not as much labor in producing your product, you might want to base your overhead estimates on other things. And that's where activity-based costing is useful, right? Because you can use so many different types of costs. You can even use non-manufacturing costs in activity-based costing. And you can use multiple, right? We've seen as many as 5 different activities be used to estimate overhead. So it gets a little complicated. Is there anyone that just came in and did not put their name on the list? Okay. Let's see. I covered that. Again, the way we do it, normally with the traditional method, you have to estimate your overhead for the entire year, right? And you divide that by whatever activity. Traditionally, well, what are the 3 options? The traditional costing or your overhead?
Machine hours and
Well, so direct labor has 2 flavors. There's the hours and there's the cost, and then there's machine hours. So direct labor cost, direct labor hours, and machine hours. Those would be the 3 traditional activities. So normally you take your total estimated overhead divided by your total activity that you've estimated, one of those 3, and that gives you a rate, right? And then you multiply that rate by the actual direct labor hours, direct labor cost, or machine hours to apply overhead. But with the ABC method, you need to know your estimated overhead, but you divide it up into multiple cost pools. So you're breaking up that total overhead into multiple categories, and then you have a different activity for every cost pool, right? So we also talked about absorption costing, which, as you might remember, is what we already are used to, where the fixed manufacturing costs get absorbed into your manufacturing costs. But with variable costing, it's different. With the variable costing, and this allows managers to see only how their variable costs impact their gross profit and separate it out from the fixed costs, right? So with variable costing, the fixed costs for manufacturing, they moved further down the income statement. And that way it's easier to see the impact of the variable costs separate from the fixed costs, right? And is variable costing GAAP compliant for producing an income statement? No, only for internal purposes. And that's basically it. It doesn't sound like a lot, but when you get into actually having to calculate the numbers, you might remember there are a lot of steps involved sometimes, and it does get a little complicated. Does anyone have questions about anything from this chapter? All right, well, we have gone through the entire exercise set. So we are going to go through 4 problems, and some of them are a little complex, so you'll want to take good notes, and then we'll be done. I'm sure we're going to be finishing early today, but as usual, if there's anything you want to stay and go over, any particular problems, whether from this chapter or prior chapters, I'll be happy to do that. Okay. So let's move on to the problem sets.